Hey TikTok, Jim Malone here, coming to you live from Dallas Trading Floor. It's Friday. It is the 24th of April, and I'm Jim Malone, and hopefully I'll be with you for about an hour, just trying to review kind of what's going on in the market and some opportunities that I see coming up and sort of how I'm trading the market right now, and also your questions. We're broadcasting live on both Periscope and on YouTube today. We weren't on YouTube yesterday, but we've moved back to YouTube because we had some people that missed us on YouTube, which is a good thing. So actually, there's some people out there actually looking, which is exciting to me. To get us on YouTube, you do have to type in, you have to go to YouTube and then type in Dallas Trading Floor, 3 words, and it'll come to the it'll come to the page, and then you can just click on the live and go from there. On Periscope, we're on at pscp.tv/Dallas Trading Floor, all one word. And the reason that you might want to take a look at this is this allows you to actually see the charts that I'm gonna put up online. And also, so basically getting started here. It is interestingly enough, we are in a confirmed uptrend, which is interesting because it doesn't feel like one. It certainly doesn't feel like a confirmed uptrend, that's for sure. It feels more like kind of a sideways movement. At least that's what I've seen this morning. Just for full disclosure, I closed my position in Tesla. I bought back the call and then I sold the shares. My shares actually declined in value, but fortunately I was able to cover that loss with buying back an option at a profit. So I really did a whole lot of nothing for the last 3 days, but I held on to some gains that I had earlier. And then I also had gains earlier in the week shorting the spider. Currently I'm all in cash. So I just wanted to bring that forward to y'all. So we actually are in an uptrend. You wouldn't think so, but you know, that's kind of how it is. Very interesting. Also, I just wanted to show you how the spider is doing. Now, if you can see this online, I've put up a chart for the spider. What the spider is, of course, is it's the largest ETF in the world, and it's worth about 220 billion, I believe, in that range. I'm not exactly sure the exact number, but it is the most widely held ETF in the world. And basically what it does is it tracks the S&P 500, of course, which is basically the 500 largest companies that are listed. Now, the interesting thing about this is it's a much more broad index than you have with the Dow. The Dow only has 30 stocks in it, Dow primarily industrial, but this one is much more widely based, and it tends to be a better overall look at the market. There's also another really important index that I also look at almost on a daily basis, and that's the QQQ, or the NASDAQ 100. The QQQ being the ETF that tracks the NASDAQ 100. And these are basically the largest technology stocks. You have stocks in there like Apple, like Microsoft. Interestingly enough, technology has become such an important part of the markets in general in the last few years that some of these stocks are actually in the Dow as well, Microsoft and Apple as well. So but this typically tends to be a much more growth stock oriented index. It's really kind of mixed. It's really kind of mixed out there. I'm seeing some weakness in the market. Basically, going forward, I'm seeing basically the market move sort of sideways. I believe that we're getting ready, and I will go right back up to the slide because I'm fooling around here. If you look at the spider here, and I'm just going to kind of show you with my cursor, you can see this 50-day moving average coming down. As you can see, every time it's moved up to this 50-day moving average, it's bounced back. And that's indeed kind of what's happening today. It moved below the 50-day moving average on Thursday. It's now moved back up to the 50-day moving average, but I suspect by the end of the day, it will back off. So we may be in a situation here where it may start to pay to start shorting again. All right, let's see. Let me just look at here. If it's a confirmed uptrend, should we start entering long positions? I don't think it's a confirmed uptrend. I know I put that I know I put that out there. What a confirmed uptrend mean basically is that the market is not has temporarily corrected and is now moving up. I believe this is. I take this with a grain of salt. I wanted to show you that because that is sort of what's happening. There are limited opportunities, I believe, to go long in this market. This is a very hard market to trade because it doesn't really finding direction very well. So I do think that it's very on a limited basis, but I do believe that we're likely to see a retest of the spider, and I think that if we get some bad news, and I think we're going to get some bad news next week, and again, I don't like to be a negative Nelly out here, but I think some of these earnings that are going to come in, so next week is going to be an extremely large week for earnings, and that's part of the reason I closed my position in Tesla, and also that I didn't like the action on it as much as I had the weeks before. I believe that we're going to see some not necessarily earnings misses, but the real important one is going to be how the earnings for Microsoft come in. I think they're going to come in fairly good for Microsoft because they have such a large cloud business. Their Teams meeting business is huge, and there's just a lot of things that they have going on that's really good. But the lack of this country being open, the United States I'm talking about here, with the COVID-19 thing, it's a real situation. I think that starting next week and the week after, we're gonna see a real cash crunch to a lot of people that just don't have any savings, and it's going to be very tough. And I'm not looking forward to this because I think any of the companies that really have any exposure to the consumer market probably are going to be not doing quite as well. Now, hopefully we'll see a bounce back from the oil business. I'm hoping, but that's way down as well. By the way, just a few years ago, 20% of the S&P 500 basically was in the oil and gas energy sector. That's about 3% today based on the amount of the decline in their stock. So they're really, really floated down. I don't know. I do think they're going to come back, but I just think it's really too early to get aggressive buying any of the oils. Even though ExxonMobil, Chevron, these are all historically good prices. I just don't know going forward if they're going to move up. My preferred trade going forward is going to be with the cutting edge companies, and then also to look at companies that are heavily indebted that are possibly going to be in trouble and possibly shorting candidates. Obviously, the real obvious choices for this are the retail sector and also the transportation and hospitality sector. Those three sectors just look extremely weak. And, basically, I'm going to try to put together for everybody out there a list of highly indebted companies, over the weekend, depending on how much work I would do over the weekend. But these are going to be ones that we want to possibly zero in to potentially short. I haven't really been shorting individual stocks all that much during this downturn. The only exception was Boeing, and I did very well on it. But I do think that there are other stocks that provide a little bit better, more a little better way of going for shorting. So if you want to get on my mailing list, I haven't really started mailing it heavily. I'm just right now putting it together so I can get my alerts thing going. But it's available at the website, DallasTradingFloor.com. Just go in the comment section, put your information in there, and I will try to get to it as quickly as I can. I'm a little bit short-staffed, unfortunately, because I'm not at my office. I'm actually broadcasting from a remote location here in Dallas. I'm in Dallas, but I'm not at Dallas Trading Floor, so that's the way that goes. Okay, first question. Hey, thank you, man. Let's see if I could put that up on the screen. Show it. I'm learning all. I'm learning this. Okay. Exactly. Exactly flat as a pancake for the last 2 days. Just a few. Yeah, absolutely. That's a really good point. I mean, we are moving sideways, folks. And in sideways, there is a trading style that I like to use in these sideways markets, and it's basically a covered call. And the way that works, I had a covered call that I closed today on Tesla. I made a little bit of money, not a whole lot. Just a few $100, not a home run by any stretch of the imagination. I thought I was going to make more, but I just decided, well, hey, it wasn't trending right. Close it up. This is the last day of the contract. But basically, the way that works is that you purchase a stock that has fairly good liquidity, and then you sell a call option at a price that's either in the money or right in, just barely in the money, at the money, or just a little bit out of the money, almost exactly where you purchased the option for. And then basically, as the month goes on, typically you want to be out about 30 days, 35 days on these. Then you basically want to then sell this option, and then as the option decays, the time decay, what they call the theta on that, and this is just a technical term for trading options. It's the time decay because options have a limited period of time depending on what their expiration is. As the time gets closer to when the option expires, typically the option will gain value if you sold the option. So that's a good way in a sideways trending market, even where stocks are going nowhere, to basically make money with reducing your risk. But that's called a covered call, and I'll probably try to put something up maybe on my YouTube channel. By the way, I should have a URL hopefully here pretty quick. I'm still working on that, but that will show you what the covered call is, how to execute that kind of trade, and why it's good in a sideways market. Basically, the way I trade the market is that I have basically three styles. It depends on if the market's going up, then I am a long buyer. I typically will buy long and then sell. So that's the way most people look at the market. If the market is trending down or we're in a market correction, that's when I'm in cash or a short seller. And then when the market is going sideways, I'm basically selling covered calls. I went from a covered call position, as I say, this week in Tesla towards the end of the week. I went from a shorting position at the beginning of the week. I was shorting the spider. Then come Wednesday, the market started to move sideways. That's when I moved to this covered call position in Tesla, and then I closed that up. So I do think, though, that we probably are going to be moving down to the downside a little bit next week. So we might want to be getting ourselves ready, getting in cash, and then possibly looking to short the stocks that have high indebtedness. Typically, a good short is a stock that has a fair amount of debt on its books, and that's a way that you can benefit. That's a way you can benefit from a stock, is to is to find something that's in debt and that's heavily indebted, and then look for the right chart pattern. It's called the head and shoulders pattern. And again, I'm going to try to be putting some of this on my website, and then go short on that. And really, to go short, all I'm talking about here is that I personally trade with TD Ameritrade. This is not an endorsement for them or anything, but they have a good platform for this. I have a level 3 options account. It's sort of the highest capability, but what that lets you do is it lets you borrow shares from the brokerage, sell them into the market, and then cover them later. And that's really what the short selling is. Now, if you don't have that capability, or you don't have a lot of money in your account, a way that you can also do this is to short essentially either the markets or sectors. There are a number of companies out there that provide these, like the SQQQ is one of the products out there that shorts the S&P 500. And what that means is that if the S&P 500 index goes down, typically this will go up. Now, the SQQQ is a leverage fund, meaning that if it corresponds basically to if there's a drop of about 1% in the S&P 500 in any day or period, it typically will appreciate 3%. So it magnifies any directional move to any directional move. The great thing about this one is that you don't have to get into the mechanics of shorting. You just buy the ETF if you think that the market is going to move lower. And I do believe that the market probably is poised to move lower during earnings. Because I don't think the earnings are going to be that good. So you might want, I don't say buy the SQQQ now. In fact, I'll show you, because I don't think today it's going to really be the optimal time, because as you can see, it's down. Currently, when I took this picture, it was 1312. And as you can see, it's quite below the 50-day moving average. Now, I do believe we will see a movement to the upside when the earnings start coming in, because I do not think they're going to be good. And frankly, a lot of the companies have withdrawn their guidance, and so I think that we may see a movement to the downside the next week. That's really what I think. Now, let me take a quick look, see what everybody out there is saying. How much is the possibility of U.S. going down to zero? Here's the thing about USO. USO, for everybody out there, that is the oil ETF. And I'm just going to pull up on my other screen what that is. The thing about this one, I don't think they're going to let it go completely to zero. What they're going to do is reverse split it. And that's what these funds are doing. When it's getting close to zero, or it's falling below $1, what they're doing is they're doing these inverse splits where they're taking 10 shares and then making them into one share, and that's how they're getting to boost the price up. At one point last week, this one ETF accounted for something like 30% of all the oil deliveries in Cushing, Oklahoma, and of course, there was a negative rate because there was no space there, and it's just a tremendous problem. So I just don't think if you're in this right now, I think it's a good time, possibly to cut your losses, get out to cash, wait for something to happen on the oil. The thing about oil is that it's very political, and it just depends on several things. For one thing, the Iranians now are trying to cause a war in the Middle East because they think that will raise the price of oil. It's ridiculous. I mean, essentially, we have a lot of countries out there that basically are praying for a higher oil crisis because it's crushing them. I mean, if you think we have a problem in this country, the rest of the world is in a whole lot worse situation because they have literally nothing to sell that generates dollars. And of course, they have to have dollars in order to pay their debts, because most of the debts in the world, even outside of the United States, are not denominated in the local currencies. They're denominated in dollars. So they need dollars to pay those indebtednesses. I don't know if you know this, and this is because of everything else going on, it's not it's not grabbing headlines, but it looks like Argentina is going to default once again. This is kind of where I think that it's time, and I'm not really a natural gold bug, but I do believe that we're going into a situation, at least in the near term, where gold and gold-like stocks might do very well. Let me pull up again, and this is one that I really like. It's a little bit down today. It's down 30 cents, but I think this has a really good chart, and it's outperforming the market. It's a stock called Kirkland Lake Gold. I am not in the stock, but I'm looking to start a half position in this next week, possibly. I do think that if the earnings come in poorly, this might be one of the areas to hide for a long. Short other stocks, but I don't think this. I think this one, Kirkland Lakes, is a long, and it's basically outproducing. It's outperforming most of the market. Currently selling about 41.49, and that's Kirkland Lakes Gold. And the really interesting thing about this particular stock is that they take positions in other gold mining companies, and so it can be very good. If the price of gold goes up. Currently, the price of gold is around $1,700, and rising. And I do believe that we're going to see, possibly by the end of summer, we may see $2,000 an ounce gold. And if we do that, if it moves a little, if gold moves more above this range, then I think we're going to see some serious movement in these gold stocks. But for right now, this is more of a safety play. This isn't really, I don't know how much actual money you're going to make on this. I think you're going to make more money in this market shorting stocks that have heavy debt. Just my opinion there, but I think that's going to be the way to make money in this particular market, is shorting stocks that have heavy debt. And again, we just don't really know yet how that's gonna go. So that's Kirkland Lakes, and I just think that that's an interesting one to look at. Let's see, do I have any questions here? How about the tanker stocks, FRO? The problem with the tanker stocks is that I just don't know. See what's going to happen. I believe, this is, $10. Okay, not bad. It's down a little bit today. The thing about the tanker stocks is this: we have a demand shock, not a supply shock right now. If we had a supply problem, then I think tankers would be the right move. I just don't think they are in the current environment, because what's going to happen in the next month in a lot of places, especially in West Texas, they're just going to start capping wells, and that's going to reduce production, and then basically, the storage will work its way out. We don't have a demand problem. We don't have a supply problem. Excuse me. We don't have a supply problem. We have a demand problem. So I don't think that a tanker stock, at least long term, maybe short term, but long term, I don't think you're going to make that much money. And there's a lot of shipping tonnage in the world, and it's just, the thing is, you do very well when there's a supply issue and not a demand issue, as there is now. There's a demand issue because literally people are staying home; they're not driving cars, and I misspelled that. Let me change that. There we go. I just wanted to go over you stocks that that funds are buying. There are even now, even in this market, stocks are there are stocks that people are moving into. Top of the list is Moderna. It's up strong. Also, we have this is my pick of the day right now. It's called CRISPR Technologies. It is a Swiss company that has used CRISPR technology, which is a gene editing technology, to produce some novel drugs. Now, why is this important? Well, this is right in the wheelhouse of creating new products and potential vaccines for the coronavirus. So I do believe that there's going to be a lot of interest in this. And as you can see, it's moved very nicely above. It's got a very nice trend line above the 50-day moving average that it has. So this is a potential one. It's also this is in the top 3% of all stocks in terms of its performance, its price performance. And we have very good institutional support here. The reason why it usually makes sense to buy stocks that funds are buying is because they will move into the stock, and as they move into the stock, it will appreciate the stock. Really, that's the one thing. Individual buyers don't move stocks prices all that much, believe it or not. It's the funds that are buying and selling that make the difference. That's why there's certain kinds of action in the market that you want to be very aware of. One of them, of course, is when the large funds, I'm talking about the ETFs and the mutual funds, are buying into a particular sector. Right now, the biotech pharma sector is definitely on the radar of many large funds. Now, the problem with this is there's a lot of biotech companies, and most of them are very thinly capitalized. So if they usually lose money until they get acquired by a large company like J&J. But if you look at the way the funds are moving, capital in and out of areas, that's where you want to look kind of for your basically your midterm holds. I like CRISPR Technologies because they do have some patents and they have some intellectual property protection on this gene editing method, which allows you basically to create almost like designer drugs. So that's kind of a term that's been thrown around, but this is a good one. CRISPR Technologies. Just wanted to put that out there as sort of the stock of the day. Let's see. Any comments? Yeah. Oh, okay. And this is an online gambling question, I believe. Let's see. Online gambling, DraftKings is tradable from today. Online gambling, yeah. You know what? I think this is good. Thanks, man, for putting in this question. I appreciate it. I think online gambling does have some real is going to do well based on this, in this coronavirus environment. The biggest problem right now, of course, is that, man, the NBA, everybody's canceling, so there's not a lot of real sports. So I guess the NFL draft, the NBA draft, these are going to be big. So this might be the way to go. Also, there's another company called Penn National Gaming. I don't know if you're familiar with them, but they look to possibly, be a leader in this area. There's been online gambling for a long time, but it's been sort of illegal. It's basically companies that are based either in the UK or the Caribbean, and of course, U.S. people supposedly cannot participate. I do think this is going to be a big area. I know that that in Vegas you're seeing a lot of interest in there. The problem I see right now with this is the regulations in the various states, because that's sort of how it's that's sort of how this is regulated currently. It's by the states, but I really do think that online gambling is going to be a big deal, especially for sports gambling. But the problem right now, of course, is that there's no sports to gamble on, which sucks because it just sucks. That's all the way I can say. Okay, when do we go long? 50-day moving average. Okay, I tend to talk a lot about this 50-day moving average. I'm going to pull up a slide here. I believe this is Microsoft. All right, market trend. Okay, not Spider. Okay, SQQ. There we go. This is the NASDAQ. And the reason the NASDAQ is an important chart is because that typically is the largest of the growth or technology stocks that are most of the technology stocks are in this area. What this line is here, this red line on this chart, this is the 50-day moving average of this. Now, as you can see, this is a very distinct V-type shape. Now, here's the problem, though, that typically it has. It's moved through the 50-day moving average, but the further it moves from this line, the furthest move from this 50-day moving average, if this line doesn't turn up, the more gravity it has pulling it back down to Earth. And I think that's what's going to happen next week. Even though we're slightly up today, I do believe that when the earnings start coming in, and we're going to see some horrendous numbers. I mean, unemployment is going to on Thursday of next week, the unemployment numbers are going to be really, really bad again, I believe. And also, I don't think that a lot of the other numbers are good. So I do believe that, we may see a turn in the stock. Now, typically, I tend to like to be long when it's above the 50-day moving average. This is just very much of a rule of thumb, and short when it's below that line. Now, not always. It's depending on the market, depending on the trend of the market. But if it's moved past the 50-day moving average, that means it has positive momentum upwards. If it's moving lower than the 50-day moving average, that means that there's momentum, there's selling pressure, and it's moving lower. So that's kind of what I'm talking about with the 50-day moving average. Let's see. Any questions? Okay. Might be a good day to short Gush. Let me take a look at that. You know what? That might not be a bad idea. Here's where you're going to make money shorting something like a Gush. There's not much to short there. This is the problem with the oils, is that they're just not a lot there. Okay, yeah, it's down. to 29. You might want to see how the price action of this is, and then it's possibly a short on here's the thing about shorting. You might want to short it over the weekend. Just an idea. But again, oh, yep. Okay. Hey, this is great. Excellent. Excellent. Let me put this comment up on. This is a great comment, by the way. Yes, GSP Baxter. It has a head and shoulders pattern. That is awesome. You definitely win for you win for today. What is a head and shoulders pattern, you ask? Well, yeah, okay. It's got the left shoulder, it's got the head. Yeah, okay. Now, it's not a complete head and shoulders pattern, by the way. Just so you know, it's not a complete head and shoulders pattern, by the way, on Gush, but it is making the head and shoulders pattern, okay? And that basically is there's a left shoulder, as you can see, there's a little rise there. Unfortunately, I can't show this on the chart. And then there's a head, which it's at the highest it was start of today. It's going to come, if it comes down and then reverses and usually the right shoulder is lower than the left shoulder. If the right shoulder is lower than the left shoulder, it'll come down and it'll reverse back down, and then you'll see a right shoulder at a lower level. If that happens and that completes the shoulder, when that turns down, that's when you short, because the likelihood of it moving very fast to the downside is tremendous. Now, here's the problem with this. There's not a lot to short there because there's only the prices are not very high. It's $29. So there's not a whole lot left to short. Typically, when you do short something like that with the head and shoulders, you want to short it down to about 20% below where you entered the selling. And so you want to go and you just want to take that 20 and then cover, because typically it'll then trend back up. And then if it's real bad, it'll move back down again multiple times. But typically when you're shorting, it's just like when you're going long, you want to look at that 20% movement. At a 20% movement, you want to take your chips off the table. Typically, it's just you don't have to, but the way I like to do it is when I short and it goes down 20%, I will typically cover for the amount of capital that I have. And the thing about when you short, there's no capital because you're actually selling. But I typically will take some profits at that level. So that is a very, very astute. Thank you very much for that comment. That's a really astute comment. And the head and shoulders pattern is, potentially, especially in this market, can make you some serious money. So definitely time to think about that. All right. When do we go long on 50-day moving average? Moving on. Yeah. Okay. Here's the thing. These are just totally rules of thumb. But typically, if a stock, and I'm going to show you this on the NASDAQ chart. Let me pull that up right now. On the NASDAQ chart, you can see it's moved beyond this 50-day moving average. Okay, that means that there's upward pressure on the market. Now, if I had any faith in this market, I would continue. I would move into the market. I would go long on this market. But because I don't have any faith in this market, because I don't think that we factored in the results for all of this unemployment, I think that possibly, and again, it hasn't really totally happened yet. It's starting to. I think this is going to turn, and it's going to turn downward. And I don't know if it will collapse like it did at the end of March, but I think that it's going to move lower. And when it starts to move lower, when it starts to turn downwards, it's going to move below the 50-day moving average, and I do believe it'll pick up steam moving below the 50-day moving average, because I do believe we have to test the lows of March 23rd, which on the spider was, and I'll show you this right now on this chart, which on the spider, if you can see this red bar here, this is March 23rd. This is 218 on the spider. As you can see, it's 279 right now, basically hugging the 50-day moving average. Now, that's the reason why the market is going sideways, as you have people here have so astutely said the reason it's moving sideways, of course, is because it's hugging spiders hugging this line. So the whole market is kind of going sideways, trying to find direction. I do believe that we are coming in very closely to a situation where that may be an issue. And this is the stock to watch. This is Microsoft. It's reporting next week. And I do believe very strongly that we're going to see Microsoft being the stock that, is going to be the one that that's going to tell the tale. I mean, it's going to tell the tale. If Microsoft can hold up, and again, it's above the 50-day moving average here, as you can see, but it's starting to trend downward. And if it moves to this, and I don't know if it'll move decisively to the downside because they're going to have some fairly good numbers, even in this marketplace. But this is the one to watch. If they don't beat expectations, I think the market is going to move down. That's my opinion. Okay. How's FMV doing? Take a look at that really quick. Thanks for that chat. Franklin, Nevada. Yeah. Thank you so much for giving me that. Franklin, Nevada is down a little bit today, interestingly enough. Yeah. No, okay, it's down a little bit. It's trading at 134. But it seems so it was up the last 3 days. It's trading down a little bit, but I still really like this stock. This is the reason I like this stock so much is because I think gold is going to trade higher. And let me see if I can get a chart on that for you on the screen here. Let's see. No, I can't. Doesn't look like I can do it. Maybe I can here. Let me go in here to my screen and bring this up. So I'll show you in just a second. Let me pull back there. All right. I should have this up in a second. So a chart on Franklin, Nevada, which is going to be it. Okay. It's not letting me pull up. Oh, well. Such is life. Okay. Why do you like TD Ameritrade? I'm trying out both. They're both good. The reason I like TD Ameritrade, to be honest with you, is because of their Thinkorswim platform. It's very good for trading options, and I trade options, so it really works for me because it basically allows me to set my stop losses very easily, and when something is trading right, when something is trading right, I can very quickly see kind of where to set the stop loss so that I can get in and get out. I just particularly like it. It also, like a lot of the other ones now, it has a live feed of CNBC, which is kind of nice for the get the market pulse on a minute-to-minute basis. That's why I like it. But E-Trade is excellent. It was bought by Morgan Stanley. So you're starting to see a lot of consolidation in the online brokers right now. You're starting to see a lot more consolidation. Basically, Charles Schwab, which is the biggest, they bought they bought E-Trade, and now we have Morgan Stanley buying Morgan Stanley bought E-Trade. TD Ameritrade was bought by Charles Schwab. So Charles Schwab and TD Ameritrade are probably going to be the biggest. Now, there is one other really good firm out there called Interactive Brokers. It's more what the professionals use. It's a little smaller brokerage, and that one is good as well. I'm not against some of the newer brokerage. I'm not against some of the newer companies like Robinhood. It's just that they've had so many issues regarding their they've just had so many issues regarding their execution, and it's just been very difficult for them to get a product that works. And so it's just kind of that way. So difficult in that area. So yeah. Anyways, let me go ahead and share the screen here. Yeah. All right. Screen 2. Figure that out. And see if I can get something over there for everybody. All right. Okay. All right. Okay. All right. So if I have any more questions? No. Okay. Oh, Boeing. Yes, good question. Boeing. Let me take a look at the chart on Boeing. BA. Let's take a look at that. Yeah, it's down today. It's been trading in a fairly tight range from about 150 down to about 125, so about 25 points. That's pretty decent range. I do think we're going to see it move lower, probably to about, I predict by the end of the week, it'll probably be about trading about 120. Just my prediction there. But I do think this is potentially a short candidate as well. All right, one last question here. Join. All right, let's see if I've got any. Oh, hold or sell on Boeing. If you've made a profit on Boeing, I think it's a good time to sell it into the weekend, because we never know. This is a strange market because we're moving sideways, and because the market is being so moved by the rest of the market. The market is being moved so much by what's going on in in the market that I wouldn't want to hold this one over the weekend. So if you have a profit position, close that position, take your profits now, and then see how trading is on Monday. I do think that we're going to see I do think we're going to see trading go lower. I do think we're going to see trading go lower next week, because there's a lot of key earnings that are going to come out, and I also think that we're going to have another horrendous unemployment number. And if we have that, and I'm not a cheerleader for it, I wish that it wouldn't happen that way. But if we do have that kind of situation, then it's just going to be one of those things that's really, really bad. This is the key. This is really, I think, the key stock to watch reporting next week, and that's Microsoft. And as you can see, it's been trading fairly high into its range, but it's the 60-day moving average is 163. I do think that we possibly are going to see Microsoft back off a little bit, but there is the buy point on Microsoft. I don't know if I can show you this. It's actually 191, and I don't know if I can show you this with this, but it's right here. It's this peak here, as you can see, right before we had the down, and then it's come back, and then this is March 23rd. This is the low of the market, and then it's been steadily going up, but now it's starting to back off. This is the reason why I believe that we're going to see more damage next week. I think we're definitely going to see more damage next week to the market as some of the results come in. So let's see. Netflix has recorded high, and it went down. Yeah, exactly. That's a really good point. Thank you for bringing this up. Yeah, thank you for bringing this up. Netflix. Yeah, Netflix. I mean, everybody's watching the Tiger King and everyone's watching Netflix, and yet it still went down. And this is over the last 3 years. This is probably the best stock in practically everything. And this is a total FANG stock. Here's the thing: everybody has crowded into the FANG stocks for safety, and I understand that. But I just think in this market, we're going sideways now. I think we may move to the downside as some of these numbers come back in as as the economy tries to reopen. Now, I'm hoping that the economy will be able to reopen and we'll be able to get a better it'll get better than it's been. But I do think we're going to see some just absolutely horrendous unemployment numbers, and I don't think anyone has really realized how much the lack of cash is going to be out there now. At the end of the summer, though, they're flooding the market with so much cash, though, that I think by the end of the summer we're going to see huge inflation. So it's not going to be good. Tenants aren't going to be paying the rent, which is not good for a lot of the REITs. People are going to be out of cash, and so the consumer economy, which is 70% of our economy, I just don't see it doing that well. Now, there are some bright spots, of course. The staple stocks like your Procter and Gamble's, like your Walmart's, but everything else not so good. So I think that the stock market is normally very optimistic, but I do think that once we start to see the demand destruction, based on the reports that are going to come in next week, I think that we're probably going to be trending lower. So I have moved my positions to all cash, and I'm in all cash right now, and I'm looking for opportunities to short coming the next week. So let's see. Okay. All right. Thoughts on KL? I think KL is I still really like KL. I do think that it is it's trading a little bit down today, but I think that this is, you could definitely, it's not trading down that much. It opened right above, which is nice. It's trading down a little bit today. This is a Friday. Typically, stocks tend to trade down on Friday because options expire. That's just the market. I do foresee this one moving higher, at least over the next month. Now, let me take a look at the options, because that's the tell. By the way, if you want to tell how a stock is going to move, what the market is saying, how the stock is going to move in about 30 days, you want to look at the option basically very near at the money. So there's a 45 May 15th call. It's trading for 146. It's up 5 cents. So I do think that there's optimism that it's going to go higher from where it is now, 141. So the market is saying that this, in the next 30 days, we're looking at the consensus for the market in the next 30 days for KL is that it's going to be trading at about the 45 level. So I mean, there's significant there's consensus on that 45 to 46 level. So I definitely think this is a good stock. But again, like everything, you never can tell. You always, if you go into a stock like this, if you're going to go into it long, definitely want to set your stop loss losses. I would set on this one. I would set a 7% down. So whatever you pay for the stock times about 97%. You want to have a market sell order at that level just to protect you on the downside. But the market, according to the option, basically is saying that this will appreciate between $4 and $5 in about 30 days. So that's the way you can use the options to kind of give you sentiment. Look at Zoom. Okay, thank you, man. I appreciate that. Zoom is just, everybody's, Zoom is phenomenal because everybody's using it, as they say, for meetings. Yeah, look at those options. Those are beautiful options. Okay, yeah, 7. Wow, that is just tremendous. Okay, a really nice play on this one on Zoom, because I'm looking at some of these options that are really nice. There's a $15 option for the 180. A good play on this one would be to go long on the stock, buy 100 shares, and then sell the May 15th call. That's going to be a good play. Okay, looks today's option. Wow, it's even up. And if you don't want to go that long, wow, this is a good. Okay, thank you for showing me that play. That's a really nice play. There's a good play that you can do. This is a 7-day play. Buy 100 shares of Zoom, sell the 180 call, the May 15th 180 call. Wow, I'm sorry. Sell the May 180 call for $850. You can pick up a quick $850 to $1,000 on this in the next month, in the next week. That is a good play. Matter of fact, as when we get off, thank you for telling me that. Thank you for showing that. That's probably what I'm going to go long on. Zoom, buy and then sell the May 1 option. One May option. All right, well, that's a good one. Thank you very much for that. Appreciate it. INO. Let's look at INO. Let's look at INO. INO. 13. Look at the chart on that. Oh, yeah, nice. Okay, and this is Innova Pharmaceutical. Okay. And it's it's coming back to the blow off top. Wow. Yeah, this is a very nice chart action. Let me look at this on this is very nice chart action. If you're in this, stay in this. This is very, very nice chart action. I really appreciate that. All right. Well, it's almost, no, it's 51 minutes. Okay. For everyone that wants to get on the mailing list, I'm going to put up on the screen right now, just, kind of the free thing. And it's basically join our free mailing list. It's free, and because I don't take any money from anybody. I just trade my own stocks. So, I try to give it to you as straight as I can because I tend to eat my own dog food. I tend to enter the trades that I recommend here. So our free list, just DallasTradingFloor.com, and just go to the comment section, put your information in there, and we'll get you all set up. I haven't really started blasting that out yet, but I'm going to do that in the near future. And I so appreciate, again, everybody here tuning in. And okay, what strike on call for Zoom? Okay, the strike I like. Let me go back. Thank you for bringing that up. Let me just look at the strikes here that I'm interested in on Zoom. This would be a short. Ooh, boy, that's a really nice one. I don't want to go out too very long on this, though there is a nice premium if you go to the May 20th. I would be looking at, this is 75 strike on the 180 call today. Wow. I would be looking at, I think your best, it depends on how long you want to be in the trade. If you want to be in the trade basically 7 days, I would go with the May 1 expiration. And what I would do is I would go in and buy the stock right now for 176. I would sell the 180 call. You're going to pick up an 850 premium, which is super. And you have the potential appreciation to that 180 level. So this could be a home run. This will make you $1,000 for an investment, a short-term investment of about, it's fairly expensive, about $17,000 if you have that kind of a way to trade that much. This would be the covered call. That's the strike I'd be looking at, the 180 strike price. I may be doing that myself. Okay. Well, everyone, it is almost time. It's I hope that everyone has a really good weekend. I'm going to be gardening this weekend, just so you know. not that that's important, but I'm pretty excited about it because I'm getting a load of shit basically delivered to my house, and a guy with a rototiller, and me, and some flowers. So I'm very excited. I can hopefully I'll start my tomato garden, and I'm going to make some nice tomatoes this year. If it kills me, I'm going to do that. Again, everybody, just love doing the show, and I love the comments. I do have a a phone number if you're interested. And I do, if you can't get to email or anything like that, just give a call, 214-233-5087. And if nobody answers, if I don't answer, basically, just leave a message and I'll try to get back to you. And we use some of the stuff on the show. And thank you again, everybody. I'm going to sign off on TikTok right now, and then shortly on YouTube and on Periscope. So everybody, thank you so much for your time, and happy trading, and stay safe, and please stay safe. I like your number live. Okay. Oh, you're in Dallas. Excellent. Thanks, Bob. My number, just so that if you're on TikTok, it's 214-233-5087. Again, 214-233-5087. Good. I'll talk to you soon. And on Monday, we'll be talking again. Happy trading. Make money. Stay safe. And everybody on Periscope and YouTube, thank you for watching. So appreciate it. Hopefully there's going to be some good trades out there, and I hope that everybody will be making money. I know that I'm going to be looking at possibly making some trades into the weekend, and it looks like Zoom is moving really nicely. So I may be making a covered call trade on Zoom, basically a 7-day trade, and I put that in over the weekend to see if I can wrestle some money out of the market. But thank you, everybody, for your time. We're broadcasting on Periscope, and I'll show you that address right now. Well, obviously, if you can only you see this if you're on YouTube, but it's PSTP-TV/Dallas Trading Floor, and also our web address is DallasTradingFloor.com. Thanks, and have a safe and wait a minute. I have 3 more questions. Thank you. I didn't put it up here. Okay. Let me do this. Okay. What is the best way to see what the big funds buys and sells? That's a good question. There is a column in the IBD, the Investor Business Daily, that I put up on the screen, and that will tell you what the big funds are buying. And what they're buying right now. So that's a really great way to go. I highlight that from time to time. I did. Let me see if I can put that up for you on the screen. Let me just go back in here, and I have it up so you can see it for today. So let me get that rolling. I have to start because I closed down my PowerPoint. So sorry about that. Okay, and. All right, let's go to that slide presentation that I just had, recent, and there we go. What the funds are buying, okay. Okay, stock of the day. Here we go. Okay, here it is. You'll see it on the screen right now. Let me show it to you. There we go. And I'll turn this off too. So here's what the funds are buying right now. Here's what the funds are buying right now. There we go. Okay, I'm gonna hide that too. Here's what the funds are buying right now, just so you can see. At the top of the list, you have Moderna. Then International Seaways. This is it's down a little bit. This is a bulk carrier. This pharmaceutical company that I'm not familiar with, it's up though. COLL. Zell Lab. This is a foreign company. CRISPR. This is one I recommended today. Was CRISPR Technologies. This is one of the ones that they're buying right now. Is CRISPR. And then, so if you get an idea, this just take down these symbols, mRNA, INSW, COLL, ZLab, CRSP, SWCH, SNY, EVER, TNK, SWI, and VAPO. And that'll give you the information on that. So let's go take the last question. We have one more comment. Okay, thank you so much. Oh, yeah, thank you. And oh, wait a minute. Okay. Okay. Good question. Oh, by the way, I just wanted to show you this one's way is Tom, appreciate it. A better ways to just buy Zoom puts? Absolutely, you can buy Zoom puts. I typically like to hold the actual stock because I typically like to get the potential if it's an upward trending stock, because I like to get the upside on the stock potentially from buying it and then selling it at a later date. It does produce a better return, but puts are a great way to go. The only thing with puts is it doesn't allow you as much flexibility if the trade goes against you, because you basically are going to be out the money. But you do have some safety, so it really depends on how you want to do it. But puts are definitely a good way to go. I typically like, on options, my default view on them is that 70% of the time you win if you're selling either puts or calls. Most of the time that's the way you win. And so if I can, I like to default to basically being in the selling position rather than the buying position. But buying calls buying calls or buying puts is it's definitely a great way to limit your exposure and also to move. The only issue is that if you're going to do that, you want to go with the longer period there. You want to go with the you don't want to be buying them in as close as I'm selling them. I typically like to sell them 1, 2, 3 weeks out because the decay is very strong in those options. If you're going to buy them, instead of the underlying stock, you want to be out at least 4 weeks, because that's really when the theta starts to decay at a big rate. So it's just a personal opinion. I like to make the quick hits in the market, move in and out. It's just a preference, but buying calls is a very great way to do it. Just make sure that when the calls that you're buying, make sure that they're a fair ways out. Don't buy the ones close in. Don't buy the 1 week expiration, 2 weeks expiration. Try to go 4, 5, 6 weeks out, because that's going to give you the best performance relative to the theta decay, which is an issue. I make money on the theta decay. That's the reason why I do the covered calls. I'll buy the underlying stock and then I will sell the call out, typically 1 or 2 or 3 weeks. And then there's a lot of theta decay. And so even if the stock just trades sideways, I typically win on that deal. So great. Great, everybody. Have a wonderful weekend. I'm here in Dallas. I will be back, hopefully, Dallas trading floor, actual real location on Preston Road. Hopefully this week or next. I'm hoping to be back. I really miss it. Not that I don't like living, being here at the house, but it's just not as fun than being at the office, because it's just a better environment. Anyways, stay safe. Wear those COVID masks. I've got mine here, and just be really, really careful. We're going to make some money next week. I do believe that the market's going to move lower. The earnings, I don't think, are going to be that good. There are some exceptions, and boy, Zoom has definitely been one of them. I really appreciate the commentary on that. Talk to you soon. Bye-bye. See you Monday. See you Monday.